Jitendra Shriram, Managing Director and Head of Research at HSBC India. He joins us from the sidelines, as Lata mentioned, of their conference, the HSBC Global Connections Conference. Hi Jitendra, good morning. You've been underweight on India for a while, and yesterday we got some signs of a cooling off in the market. What's the sense you're getting from here on? Are we in for a period of price-wise correction?
Firstly, we were underweight prior to the elections. Post-elections, we have turned neutral on India, especially given the kind of verdict that came through and all the improvements which we expect in terms of a stable governance and so on. Now, coming on to the second part of your question, which is related to where we see the outlook, I guess the key question that is on investors' mind at this point of time is whether it is too much too soon. In a sense, you have seen a sentiment-related uptick, and whether now it translates into earnings. So my suspicion, you had 7-8 months of continuous uptick in the market, month after month after month. The question now is that will the baton passing to earnings uplift be as smooth as what it was thus far in terms of a sentiment uptick? Thankfully, the monsoons have revived, so hopefully it brings to some rest the fact that inflation will potentially start coming off into next year. So I would reckon that the catalysts are now falling in place for an earnings-led recovery. Maybe the market will take a little bit of a breather now, given that we have seen a lot of upswing in the market in the prior 6 months or so. Now, having said that, the key parts to look at is, which is something that you mentioned just a while back, that we are seeing a lot of activity in mid-cap. Part of it has got to do with the fact that domestic mutual fund industry is finally seeing some inflows after 3-4 years of struggle, and a lot of valuations in the frontline names have moved up, and probably there is still an arbitrage available in the mid-cap universe at this juncture.
Okay, Shriram, good morning. Thanks a lot for joining us. How are you approaching the global space now? Should we worry about the slowdown or worry about the rate hike?
Well, I guess, there is clearly an expectation that sometime by the middle of next year, US will start to tighten. But I guess India still has a lot of benefits into 2015. Because globally, the Fed being such a big counterbalance to most global forces, you will see the Fed tightening, and on a counter side, you will have India probably starting to ease into next year after a long pause. So you will have a situation where probably cost of capital dynamics, by and large for the world as a whole, might be seen as inching up, whereas for India you might see it coming off, which would place us at a fairly advantageous position. So I guess the catalyst or the fundamentals are definitely starting to form a fairly steady base for India. Question is, maybe 1 quarter or so, you might take that breather before you allow that earnings to start catching up and allow for market valuations to be more sensible for the next up move.
By the way, there's some news flow that's coming in on Venus Remedies. CRISIL has downgraded Venus Remedies' long-term rating to D from a BB+, and that stock is down almost about 10% right now. That's because of a delay in repayment of the term loan. And just get the intraday chart up for you, 10% lower on Venus Remedies.
So severe downgrade. I mean, you normally would expect them to go slowly from BB to probably BBB and then C, and then this is a severe downgrade that's come suddenly. It should take a lot of market participants.
And volumes are high as well on Venus Remedies. But coming back to our discussion with Jitendra Shriram, Jitendra, I was going through the list of speakers at your conference. You have some capital goods players like Thermax, Bharat Forge, etc. that will be speaking. What's the sense you're getting about whether the capex cycle has turned at all? Are there any signs of a nascent recovery?
Well, I would say that industrial capex recovery is probably still a little while away, because most of the capital goods industrial companies are still reeling from the hangover of the past capital binge. So capacity utilization, if you go sector by sector, whether it is something like petchems, whether you're looking at cement, whether you're looking at steel, most places there is still ample headroom in capacity utilization. Commercial vehicles, all these areas will still require 1 or 2 years of growth before more they feel constrained on capacity to further put up capex. So industrial capex might be a little while away, but I think the areas which could probably see more activity in the intermediate period would be on the infra side, whether it's railways, whether it's defense, affiliated areas where we are still lacking on capacity severely, and where you could see that being the initial engine of growth. So a lot of these names that you mentioned will also be exposed in some piece to these sectors as well, which is where we see the near-term growth catalyst forming for these companies.
Okay, Jitendra, earlier today, State Bank of India cut their big deposit rate bucket, that is the 1 to 3 year deposit rates, by 25 basis points. How should you approach this as an investor? Would there be is this an early signal to get into the rate sensitives like real estate stocks?
Well, on real estate per se, I think recovery is still some way away, because we are still seeing two signs. One, that inventory levels in the housing market continue to be fairly high. Commercial continues to be weak because there is no major expansion at this time which is happening. So you will require a period of time when this excess capacity in the marketplace is drawn out, and then the fresh starting to come in that spectrum. So I think it's too early for us to play property as a sector at this juncture. But I guess the point that you make about the deposit rates, I think that probably the peak of this rate tightening cycle is now behind us, especially given that the one major risk there was a monsoon, and probably if there was a big failure, you could have probably expected one more rate hike. We think that the late monsoon and the kind of flow that we have seen on the monsoon, we do think that that part of potential rate hike from here on is done. So we are probably now looking at some point of time in future, rate easing starting to flow through, maybe after a long pause.
Okay, the other question I wanted to ask you was about the slowdown. China now is believed to be slowing down much more than was earlier anticipated. Those stimulus measures don't seem to be working. As well, now we're getting almost recessionary news from Europe. Yesterday's factory output in US was nothing to write home about. The previous jobs data was a bit of a jolt. Should we worry now about those export-led growth that we saw, that exponential growth in stock prices of auto ancillaries, even auto stocks? I mean, whether it's the Bajajes or the JLRs, the Tata Motors, it was a big export-led story. Is there a bit of a jitter over there?
Well, China overall, I think the growth at an absolute level still continues to be quite high. It's upward north of 7%. What we are talking about is some few basis points of potential easing coming through on the growth rates. So I'm not too worried about that. We are overall quite constructive about the market. And the fact is that, for these export-led names, they are still quite small in the global footprint. So for them to grow, unlike a market leader to grow, is a very different story. I still think they will have a lot more juice to grow there, because as they build out market share in these markets. So I'm not too perturbed. Yes, on IT services, I would definitely say that probably what we have seen in 1Q in terms of growth may not be replicated, because the YOY growth, you had a huge tailwind of INR, which will not come through because of the rupee wobble which came through in July. So now you'll see more plateauing out on the currency effects. So you might see a much more benign growth going forward.
Okay, we have one query that's been posted on our Money Control board. So I'm just going to ask you to solve that. Pradeepa has written to us from Bangalore, and she says she has some investments in India Cements. She wants to know if she should remain invested. What would your view be?
Well, we don't track that name, but overall on the cement cycle, I would say that clearly we are seeing some uptick in the construction sector. And South has been one which has been actually hit the worst by capacity utilization. So, I mean, if I look at all India capacity utilization, it's probably at that 70% mark, with South probably nudging maybe about 8 to 10 percentage points lower. And I would suspect that, one of the key areas where it got hit was the statehood creation in Andhra Pradesh between Telangana and Seemandhra. And as a result of that, a lot of the construction activity had come to a grinding halt. We are starting to see the first signs of some recovery in construction activity there, which should actually be ideally good for, the construction industry there. And as a proxy, cement companies as well. So I would be constructive that over a period of next 2 years, you should start seeing the utilization rates move up, which means that you should see these companies with a fair degree of operating leverage starting to kick in. And also raw material pressure should be a lot easier given that coal prices are starting to come off.
All right, Jitendra, thank you very much for joining us. Have a great conference there, and of course we will touch base with your other experts as well.